Hello, how's it going, everybody? Welcome back to mentfx. In this episode, I want to take another look into the trades that we've spoken about in the last few days, with the last few videos where we dealt a little bit with the Bitcoin markups, a little bit with some other charts, and kind of review a little bit over what happened this week. So this might be like a two-part video. We might have one released now, one a little bit later where we discuss the other currencies. But right now I have the markups off on Bitcoin. As a lot of you know, we were talking about this a few days ago, talking about how basically institutionally and how order flow is moving currently, we should only really be bullish, right? And there should only be bullish plays that we're looking for unless we start to see intermediary term or very short term distributions that can lead us to counter trade trend ideas into potential areas of liquidity, inefficiency, order blocks, and imbalances, right? So we're just on a 1 hour chart here on Bitcoin, and relatively, as we just take a look at this without having any markups on here, just to make it a little bit simple. Again, we're gonna throw them on in a second. We don't really fuck around this channel too much, right? Just from a quick look of liquidity creation and price movement, right? We can just start right here and just recognize that we had the run up in price, the fill of that price, right? Leaving just a little bit of space between here and here, but ultimately this was very algorithmically played. Moved into this order block. Let's move away. Structure was relatively bullish. Then I think we were actually looking for buys in or around this area or this area way back when. This does not matter right now. I'm not going to show you proof of that right now. There's really no point. Whether or not we broke even or partial on these, I don't even remember if we even did catch anything here. You might have been bullish on this when you saw this develop, especially if you were looking at this time frame or even lower. And again, you might have broken even based on how you got involved in that trade, and then you had this huge move down. Now at this point, what's important is, again, what do you think retail is doing as you see these huge drops? So as we all know, Bitcoin, as well as almost any other market, moves in such a way where it will get you incentivized or get you thinking about a certain movement in price, which might not be what the price actually wants to do. So sometimes these huge moves down, right, get you into that fervor of believing that we're finally going to start, going down. We're finally ready for the mark down. And all of a sudden we have the normal, markup that continues. Again, for us, this was nothing that important. All it was maybe a small loss that we took on a potential bullish scenario setup that we were looking at in this order block, right? Because remember, this down move that grabbed liquidity, this up move was met with this mitigation, right? Where we could have looked for things. If we didn't see Wyckoff in here, maybe you got to stay out of it, right? But either way, we had this huge move down through the lows, this move up again, the mitigation of all those areas in here, right? Mitigating even more of that order block while creating what order block 2.0s as we get under the liquidity resting below all these lows again. Because remember, as we're marking up, so remember back to all the videos we spoke about in the past, as we're making that markup, we're leaving or engineering liquidity within areas, right? Grabbing that liquidity to get into more orders. By doing that, we actually mitigate other orders that we had on behalf of the composite man, creating more order blocks, filling those order blocks in as we start moving, right? Undergoing mini time frame reaccumulations, bigger time frame reaccumulations, and even bigger accumulations, right, for the markups, right? And then as we start looking at this, right, putting all the things together with the snowflake rule and everything else, we have this little area here, which is another accumulation that we might have been able to catch with the move down, grabbing liquidity, the move away, the OB 2.0, the move away, the move down into the mitigation, again, grabbing shorter term liquidity in the form of potentially this trend line here, right, moving through, continuing. So again, as you start to see these concepts, as you start to continue watching my videos, all of this stuff will begin to come together and you'll start to see it, right? You don't have to be on lower timeframes or higher timeframes. We're going to talk about that in the future as well. But the reality is you can see everything that's happening on the lower timeframes by envisioning what's happening on the higher. And you can understand that this move here was basically made to grab the liquidity that rested under this trend line that was being formed in a lower time frame, right? So you don't have to be too worried about understanding all that right now, because you have the access to all the time frames and kind of moving through them and kind of seeing price develop through them. But honestly, nothing else that we haven't basically gone over on the channel is being seen here that you haven't seen before, right? We have the markup, we have order blocks being formed along the way, the mitigation of those order blocks with the fills of imbalance as we continue moving up, the fills of imbalance, the continuations up, a deeper retracement and grabbing more liquidity, the move down, creating that order block, the mitigation of that order block, making an OB 2.0, while at the same time creating inner term accumulations. Again, where's your snowflake? Right here. There's an accumulation here. There's distribution up here. There's an accumulation right here. There's an accumulation here. A mini 1 minute or 5 minute accumulation here, right? We don't have to get into this right now, but again, we can go back and see all the accumulations that played out within these areas. So, again, we have the same thing happen here. As you guys remember, a few days ago or 2 videos ago, or even 1 video ago, actually, we were talking about the buys that we were getting invested in, or the buys we were taking from this area right here. So if any of you remember this, we had this area highlighted where we were looking for the buys. We were looking to target the highs here, right? Let's not think about this too much right now. We're going to get on a lower time frame in a second. Do not be confused by the markups as we draw them. But again, I do not have every single Wyckoff outmarked on this, right? I have the ones marked up that were important to me, that led me to believe a certain bias about this market and allowed me to get involved in it for potential profits or break-evens and whatever it was. And as you all know, we were talking about how order flow is technically, for now, in our minds, from a retail, or I mean from an institutional Forex trader's perspective, to the upside, right? Again, we are not sure. All we know is that the footprints are leaving us to believe that we're potentially going higher, right? With the moves down, the continuations up, the creations of OB 2.0s within those mitigations, the moves up, the liquidation of those where we get involved. We'll see how we got involved here for the continuations even higher, right? For the reaccumulations on shorter time frames to give us even higher price action. We were actually targeting these highs here. So we're going to go over these in a second as to how we got involved in them and why we got involved in them. Because again, the point of a lot of these videos is, one, to show you how you're putting all these concepts together, and two, to show you how price will consistently give you setups. And the most important thing that's going to allow you to catch these setups and stay in them and even make good money from them is understanding that your move does not need to complete the way you expect to complete, right? So what I mean by that is oftentimes in smart money, you get involved here, right? Let's say you have some kind of accumulation. Let's make that a little nicer. Let's say you have some kind of accumulation, right? You have your spring, you have the breaks up, you're looking for potential tests off the order blocks in here and in here. Potentially you're looking at this one, right? You have a lower time frame schematic, you get involved right here for a buy, and you're targeting some highs, let's say up here, right? So this trade right here is ultimately going to be about a, let's actually just draw it on like this, right? So you're getting involved in this with your stop loss below the low, with your high aiming for this area, right? Well, let's make this a little smaller, just pretending like this. Let's say we just got involved in this order block a little lower, because remember, this is just a drawing. I just want to see there's a better R on this. There we go. So let's say this is something you're aiming for, right? And this is kind of what we were aiming for in this case. We were looking for a 1 to 19 trade when we were involved in this, and we're going to take a look at this in a second, a little bit more in depth, just talking about how we marked this up using Wyckoff and using our understanding of order flow. And again, this 1 to 21 looks very, very nice, right? And then when you get involved here, oftentimes, you know, price could start going up and then it could take you out. And again, this for a lot of people will seem like a smart money loss, right? But in reality, what you're forgetting to see is that this move on its own was a 1 to 17, right? The fact that you either didn't break even, that you didn't partial, right, is on you. So when it comes to trade management, there is no real way to go about it. Of course, you might have seen my risk management, but there is no real dead set way to go about it. Some people like the idea of partialing because they like a slower, consistent growth, and they're okay with taking potentially less profits on their higher R trades. So if I was taking a 1 to 19 or 1 to 23, it wouldn't be crazy, and a lot of people in my mentorship know this too, that I would partial it potentially an order block up here, right? Or even break even at it at about 1 to 10 or even less sometimes, maybe at 1 to 5. So what's interesting is retail is used to taking a position and closing that full position at 1 to 1, 1 to 2, and they're happy about that, right? What we need to understand as smart money traders is that of course, you can manage your trade at BE normally and keep it and hold it for like 1 to 10, 1 to 20, 1 to 30, 1 to 100, and you can be fucking Moses out here with your hands up, like making all the money in the world, and people are gonna see that and they're gonna love it, right? But also what you have to recognize is that as a smart money trader, you do not have to be catching huge RR. You could be entering trades, taking a partial normally at a 1 to 5, 1 to 3, securing yourself maybe half, right? Or even 30% of the position, whatever you want to secure for potential small profit, right? Just depending on your own psychology, and then basically being disconnected from the trade, because at that point, you don't care whether the trade loses because you've already made money, or if it continues and makes you even more money, right? So for a lot of people in smart money, what they get confused about is trying to target that final target. So this trade that we looked at a few days ago, and I'm sure you guys saw it, if we just go to the trade ideas when this was sent out, again, you guys don't have to believe that this was sent out. Again, it's all here. The date, January 8th, 2021, the time it was sent out. You can see the time on here when it was sent out. It was live, and we were looking for the entries at this area right here. Lo and behold, that was right here. So if I just zoom in on this for you, This is that 1 hour order block we were looking at. This was the entry we were looking at, and we were actually looking to target these highs here. Okay, these highs were the ones we were looking to target because why? Liquidity lies above those highs. Now, at that same time, what's important is that we see that at the time of this setup, right, without recognizing what price movement did here, we had this imbalance in here, which makes this an order block right here, right? And above here could be what? Institutional order flow that wants to go bearish, even if it's short term. So that means that you could have either, right, bought here and looked to partial here, or you could have already looked to break even at these levels, right? Because you realize price does not have to get up to these levels. Again, we are smart money traders. We are not guaranteeing certain areas of price to be met or even certain liquidity in price to be met. What we are guaranteeing most of the time, more often than not, is that footprints are left and we can use those footprints to get involved, and we're going to see some kind of mode of retracement or mitigation at that area and movement from that area, right? But we can't always be sure of where that movement's heading. Now, if we use a confluence of a higher time frame with a lower time frame entry, then of course our idea of where it could be heading could be more grounded in more succinct or logical ideas of target areas. However, it does not mean at all that that area has to be targeted, because a 4-hour area of liquidity that you could be targeting for a new higher high for potentially a structural play that will continue to move higher, right? So let's say you get involved here on a lower time frame within a Wyckoff that sets up here, right? And you're looking to target these highs. It does not have to make it there, right? It could stop here at an order block and continue way lower before continuing higher. It could also stop at an imbalance, create liquidity, move down to an order block, and then move higher, right? Because there can be intermediary swings, and this is all stuff we cover more deeply in the mentorship, and we're not going to cover right now, or we're going to cover it later on YouTube, because as you all know, a lot of it's already available to you guys here as well. I try to provide as much value as I can for you here. But let's dissect this trade a little bit, because I don't want to be doing just too much talking without looking at the actual at what actually played out. So what we can do is we can jump on a lower time frame just for a second. We can move over to the left here. I'm trying to make sure it's still zoomed in enough so you guys can see the candles, right? And you'll notice that again, we can throw in our volume. Again, volume is not necessary, but we can use it to validate schematics. And you can see we have very normal schematics that we look at, right, that give us that validation, that shows us, price wants to go higher. We have reaccumulations of those schematics, testing previous areas of tests, creating new schematics along the way, right? Doing the same thing with volume. As you can see, this is more prolonged schematic right here, but it's all there. If we go on a little bit of a higher time frame, you're going to see these movements in price giving you basically you're going to see them a lot more clearer on a higher time frame. But either way, we again have this move where supply gets turned into demand, right? All the sells get converted into buys, and you have that huge up move that is met with higher volume. And again, you have the continuation markups, right? And as we have these continuation markups, we have the same thing occur over and over again. We have reaccumulations occur in certain ways. We have prices, again, volume is coming down. The validation of the schematic comes through. We have higher prices being met again. And overall, we continue to stay bullish on it. Now, things like this could have tricked us out of some stuff, but you'll see that very, very quickly that as you start to watch prices move in the form of schematics that form, as you make your way through the timeframes and understand how the lower timeframes affect the higher timeframes, you stop just getting trapped on one timeframe. So a lot of smart money traders actually get trapped looking at the smaller timeframes, trying to spot all the moves without recognizing that the higher timeframe is much more important. And the higher timeframe has a lot of information on it, as long as you let that bias kind of color the portrait, right? You want to let the higher time frame tell you what the price wants to do, rather than letting the lower time frame affect what you think the higher time frame is going to do, right? Even though the lower time frame structure and the beginning of a lower time frame accumulation can result in a higher time frame shift of bias or a higher time frame continuation, the higher time frame orders and the volume within those orders are what are actually moving the market. And the lower time frames, usually what you want to do is wait for those to be coincided or to line up with the bias of the higher time frame, rather than letting the lower time frame shape that bias for you. So it's a very nuanced point, but it's going to affect your trading a lot. Right, so we have this accumulation and we continue going up. Again, we have an area as we've spoken about before, so let's make this a little bit bigger so you guys can see everything. We have another area of reaccumulation, or just normal accumulation if you want to get crazy about it. Again, we're not going to mark it all up because we're going to try and keep this quite succinct, but we have a selling climax and an AR and ST that kind of tests around these areas, making some equal lows, right? We have an ST and B, again, stopping to make a more equal lows, some kind of so a bunch of liquidity being created, right? A lot of people are looking at this as a trend line. People are waiting for those higher prices to potentially be met. Even structural retail traders are looking for this higher prices to be met, and they're trying to be involved in these buys, especially these candles right here that show them that, you know, engulfing are getting a lot of them involved. And again, on lower time frames, as we've spoken about in our previous videos, moves like this on lower time frames are going to start looking like even more buys to the top side. So even people that are potentially smart money traders and start to see this occur or watching this on a lower time frame are going to start seeing this, right? You're going to start seeing order blocks be respected, the moves up, and you're going to start trying to be involved. And then all of a sudden you have the drop through that liquidates your positions, and you're stuck wondering why you, even as a smart money trader, got liquidated. Well, it's because you're thinking from a retail perspective. You're still on the lower time frames. You're still using smart money concepts, but you're trying to get involved using retail level perception, right? Instead of looking at this, for instance, on a higher time frame, you're looking at, prices move like that, and you're seeing this up move, right? And you're seeing, okay, there's maybe an order block here, it's moving up, there's an order block, okay, let me get involved in this, right? And then you get taken out. And again, it's all about a matter of perception, about how zoomed in you are, how zoomed out you are, what time frame you're on, what you're expecting. So again, this whole move here, while it's engineering all this liquidity, right, also is done for the purpose of mitigating all the orders in this entire sell to buy, right? So we had this whole sell from here, this sell to buy. This is all the mitigation of it. And as we mitigate, we are creating those reaccumulations. So after we see price start to go higher, and as you can see again, we weren't too sure about volume because of how it was moving, but here's your downgrade in volume, here's your move up. So at this point, we're validating the structure of wanting to go higher again, right? And this point is when we released that video on Bitcoin where we said, you know, if order flow is to one side, we shouldn't be calling tops and bottoms, right? Refer back to that video where we did talk about tops and bottoms. We as smart money traders do not need to be calling a top or a bottom or a certain price point to be met. All we're here to call is liquidity being met, inefficiencies being met, order blocks being created, the accumulations, distributions taking place, the validation of those, and getting involved on them using higher time frame momentum, higher time frame points of interest, and our belief of what's going to happen down the line. So again, without marking this up, the snowflake rule, here's the Wyckoff that is occurring, right? You have the test, potentially, the last point of support or last point of supply, and you have the move away. Now, at this point, we were on the 1 hour looking at this. And again, as you just saw, we understand that within here, this is where price was at the time. We have an area that is what? An order block that filled in this previous order block. So again, we can fuck around with the time frames a little bit to find this order block, but it's not that important. What you have to realize is we had a accumulation that played into this reaccumulation, all the while volume was supporting all of these moves into this reaccumulation, which created an accumulation within the mitigation of an order block, right, with higher prices being met again, now leaving imbalances and order blocks looking to be involved at 50% of those, targeting new highs as a point of liquidity, right? And as we had this move down, we also had reaccumulations occur. So let's now jump down to a lower time frame and take a look at this. Let's go to the left here. So again, now you can start to see it a little bit more. Don't get too confused by the schematic. We talk a little bit about this in the videos as well as the mentorship. Schematics are snowflakes. They're going to look different for everyone. In reality, what you have here is you have two schematics. You have this distribution schematic right here pretty much that became an accumulation schematic, which you can see right here, right? So if you just want to kind of get rid of what's going on right here, if you just want to forget about the price action in here, so let's just go like this. Right? If you forget about the price action there, now you can see a very simple to see normal accumulation, right? Selling climax, automatic rally, or automatic rally, either one. Secondary test, sign of strength. Secondary test, making equal lows, making all that liquidity. Secondary test in B, right? Coming below that liquidity, also engineering some liquidity between these lows here, this low here. So again, all of these areas on a retail perspective are starting to get people to get into buy. So even though people might have been buying at this point and they were correct about their bias, they were not waiting for the proper entry to get in. And this right here is a liquidation of those people. And again, we have the same thing happen. We tap in, we move away, people are getting involved again. And then we have the real liquidation, which acts as a spring, the move away. And that spring was what gave us the confluenced entry to be entering on this order block here. So we actually sent this prior, like I said, just here. And then we were looking for more re-entries as we started to get that move away. And as you guys can see, we did get a test of that area again, so we didn't actually get this re-entry. Maybe some people did. And what you'll notice is there's actually more Wyckoff in here, so we're not going to get too deep about this, but there's Wyckoff right here again that accumulates, and then we have more we have higher prices being met here, right? And at this point we actually had something interesting happen. So again, we were expecting this to come out and come test the spring again. So anywhere within this area was a good opportunity to buy. And as you can see, the buy opportunity happened there. And again, if you were watching this on a lower time frame, there was Wyckoff that occurred in here that you could have been interested in and looking for buys off, as you had order block 2.0's form, and then maybe you weren't able to get involved anymore because price ran without you. And then volume was kind of on your side, but it was also a little bit against. But you can actually no, it was on your side, right? So you had this selling climax somewhere here, and then you had this mark up, and again, you're confirming the higher tops, the higher price action to be met. You're confirming that with the bias of the volume, with the momentum. Again, you don't need volume, but that's one way you can use it to confirm bias. And then you're looking for potential re-entries along the way to go higher. So again, we were still in this trade looking for these highs to be met up here, or potentially even just this order block to be met here, right? Which functions as you all know, as an imbalance, which is just resting in this area right here. So we could have just been targeting this area, right? This will come down to your own trade management. And as prices began to play out further, let's go to a 10-minute really quick. We were watching all this right here play out. So we'll go back to the Discord here for when this was sent out. See if we can find it. Here we go. So again, we're still in this trade right here, expecting those higher prices to be met. And as we're expecting those higher prices to be met, right, so let me make this a little bit bigger. Let me open the original on this so you can see it actually a little bit better. There we go. So as we're expecting, right, so we're looking at the same thing. Where was it? There we go. Here we go. So as we're looking at this right here, you can see all that was shared prior. Again, it doesn't really matter if you believe me or not. If you don't, just take the concepts out of it rather than the actual trades. We're looking for that spring. We got that spring. We're looking for that test. Again, you could have been involved on this test, but because it was so close to our entry anyway, there was no need to be unless you partialed somewhere around these areas above these highs, right? Because again, what's important, what's above these highs? Liquidity. So technically liquidity could be met, and then lower prices could be met as well. So at this point, we were already break even on this. So when this came here, we were really close to getting stopped out of break even, but we didn't. Which was great. We had this move away, and at this point we had another accumulation or another snowflake begin to form within this area, or at least from what I believed we saw forming. Again, we had an order block here, the move down through the lows before the move away, and looking for the re-entries at 40203.50 to go higher to meet that same price action near these highs, right? Looking at that potential 1 to 17, as you guys can see, I sent out right here, potential 1 to 17, looking for those higher prices again. You can see the let's actually get rid of that Discord. You can see the time on that. It's not really important. Again, whatever, it was sent before, but that's not what's important right now. Let's talk about the actual charts. So we get this spring occur, and we get this test of it, right? So again, this is that accumulation we're viewing right there. Let's get down to a even lower time frame so you guys can take a look at what I was looking at here. Don't get too confused by all the price action. So again, that's that same test you just saw, right? And then this is that area we had highlighted. So again, this area right here, 40203.50 right here. You can see it, and you can again see how nice price action in here was. So you could have been aiming for this area for buys, or even down here, right? Here's that imbalance within that 1 minute time frame, because it's all delivered algorithmically. And you know, if price needs to be filled this area, then we're going to expect that with the concepts that we've been learning and preaching on this YouTube channel. So we get this move away, and again, we have some kind of distribution up here if we want to talk about the snowflakes, and you could have been involved in those. So what's beautiful about this entire strategy and the way we trade is that you can basically refine the strategy until the day you die, because there's so many opportunities to be involved that you can basically refine yourself or understand yourself to the point where you know when you want to get involved and how you want to get involved. Just because there's Wyckoff happening everywhere, and just because there's prices undergoing accumulation distribution almost anywhere, and you can get this on any market as well, does not mean you have to be a participant of all that, right? The fact that it's all happening should give you the freedom to understand that you literally can wait until the perfect conditions for your trading strategy are met. You don't have to be involved, but for me, this was perfect, right? And as we began to come down to this entry, we had that preliminary support, we had that selling climax, right? At this point, I like this a lot because what we're doing is we're stopping and we're creating liquidity in very big grab liquidity, move away before our potential entry, selling climax, right? We get that automatic rally. Again, we're creating liquidity within that selling climax. All counts as secondary tests. You get that ST or that STNB, either one, whatever we want to call this, right? But generally, it's testing the selling climax, it's giving us that liquidity here. Again, people are looking at this, potentially retail is looking at this as some kind of, I'm not even sure how retail will be looking at this anymore. It's been too long since I've traded a retail, but potentially looking at some kind of wedge or something like that, looking for this breakout to start trading buys, right? So they see this breakout here, and maybe people are getting involved in buy opportunities here. And what's happening as they do that, well, the algorithm on a very short time frame is starting to pick up the sells, or the composite man is, right? Picking up the sells of these buyers, taking them out, giving us that, oops, there we go, giving us that STNB right before our entry, hitting into the order block, right? Again, mitigating it while creating liquidity. Now what? We've broken out of this one as well. So, you know, retail is confused as shit now. They're selling, but they're getting their sells bought into. So they're like, okay, maybe we should start buying again. And then they get liquidated one more time, and we get that spring right into the entry, just like we expected. So again, you might have even targeted lower. If we went to the left here and found the potentially last order block and used 50% of that, you'll see that price might have been there. So again, like I said, you can refine until you die. There's so many ways to get involved in this, and there's so many better ways to get involved than we did. But here's the spring that we got, right? And then we began to see, let's zoom in a little bit so everyone can see. There we go. Let's go to 5 minute. And then you can see that entry right there and that beautiful markup. Now, what's interesting is as we began to have this markup, let's go to a little bit of a higher time frame so we can see what exactly we're talking about, because we just spoke about a little bit concerning risk management, right? As we have this markup, notice what we have here. Up in this area right here, we actually have an imbalance. So let's actually highlight that really quickly. This area right here is going to function as an imbalance, right? So this area, we know from an institutional standpoint, usually will get filled before new prices are met. Either it's filled to be created as liquidity to be met later to go higher, or it's going to be filled and then, you know, prices can go a lot lower. So again, at this point, you can be looking to either a break even, partial. Well, you can be doing two things. You can either be breaking even once price gets here, or partialing, because guess what? As price gets to this level, as you can see, price actually sits around here for a while. It has reached a total at this point alone of about 1 to 9.5. So again, at this point, you've already technically caught in a trade that is 1 to 9.5, right, in profit. And based on your own risk management, whether or not you partial or break even here is up to you, and then continue to hold for higher prices. And what you'll see is, so this is just proof of what ended up happening. What we did is, as prices began to already take off in this area here, before even reaching these order blocks, we had already locked in the profit of this previous buy that we took. So even though you might have taken partials on this somewhere up in these levels, because, you know, liquidity was met just above these highs before, you know, lower prices were met, because we were already expecting that test. So it makes sense to take partials if you want to get back in. But again, this is not going to be important. What is important is, again, how you manage your trades. So we locked in the profit just below this stop loss, and then we had prices play out. So again, at this point, I think I went to sleep, but what I said this morning was Bitcoin ran into the OB after filling the imbalance at about 1 to 9.5. So partials or BE was definitely met. So again, like I'm saying, maybe you took partials, maybe you didn't. If you did, you made like a good 4.5% or 4.75%. If you didn't, you know, then you just took a break even. Or like I said, if you're running a 1 to 9.5 trade, more often than not, you're taking some kind of partials off, right? If you probably manage the trade, nice little over the weekend Bitcoin trade. So again, these were all over the weekend. So people that talk about, you know, time and price being an important factor, I don't really abide by those rules, right? We in our mentorship abide by the rules of, if you see the setup, you get involved, because if the traces of smart money are there, whether the session is New York, London, Asia, or if there's about to be news coming out, if you have your analysis down packed, then the footprints of smart money should lead you in the right direction, especially if you trade or if you manage your trade properly, right? And sometimes managing your trade to an area of, you know, like let's say you were getting involved in this trade and you saw this liquidity, sometimes just partialing just above this liquidity at 1 to 5 is not enough for you, right? So at this point, you could have broken even as well, because 1 to 5 is already a lot, right? And then taken off your partials at 1 to 9, and then potentially even held for longer, right? Again, like I'm saying, we were aiming for a 1 to 19 trade, 1 to 17 trade. Again, that was not met, right? Notice this. In reality, the price lost. And for a lot of people that just saw the video where we spoke about the this Bitcoin trade and how we're expecting higher prices, are looking at this as, oh wow, he's wrong, like he lost, right? But in reality, what we actually did was we either hit 1 to 3 guaranteed, right? Or we partialed at a normal area above structural points at 1 to 4, making a 1 to 2, then partialed again at 1 to 3 when prices were met here after the profit lock was put in place, right, making another 1.5 RR. And then this trade, either we partialed at 1 to 9 or even 1 to 5, or we broke even on it. So either this trade doesn't even exist in the history of what we've done, or it's in there and we've made money on it, right? And then prices broke down, and guess what? As they're breaking down, my bias isn't shifting to, oh shit, we're bearish, we're about to like fall off the face of the earth with Bitcoin or whatever market we're looking at, because I understand that this was all part of a lower time frame based setup. And this could be just a major retracement that might be part of a bigger order block that might continue higher. So we're not going to look at that right now, but in reality, right, what is this that we just caught right here, right? We had a down move, an up move. We looked to buy here, and what we did is we caught this buy here that didn't get met with higher prices. Instead, it got met with this, but that doesn't mean that it can't stop here and then continue, right? Here's your lower high, here's your higher high, here's your higher low, here's your higher high, right? And we can still be expecting those prices to be met, but we just have to wait for the confirmation of that. So that's how we can look at this market, and that's how you can be involved in the market using all these concepts, and how you can be using your ideas of risk management and proper trade management to be involved, right? So again, we just looked at one currency, Bitcoin USD, and this is what we did over the weekend. So if this is something you can do over the weekend, imagine what's available to you when the actual rest of the markets here on the right are actually open, right? So this is just a small watch list, but imagine if you had all of them open. There are so many opportunities, right? So hopefully this video served as a good example as to how we predicted a bias on Bitcoin over the last few days, how we played out to that bias, how we saw the snowflake setups occur, the Wyckoff setups occur, how we look to be involved in those Wyckoff setups with the confluence of inefficiencies, imbalances, order blocks, and all this other stuff, and how we got involved. So again, some people in the mentorship might have gotten involved on this test. Not sure exactly. We were just looking at crypto for fun during the weekend, but hopefully this serves as a good beacon for what you guys can do down the line when you start looking at currencies and how you can expect certain moves, right? And this should not scare you, because guess what? We actually locked in great profit. And again, if you held this, again, I'm not going to bullshit you and say that we held till the high and we held this to the high, right? To this high, right? Because we didn't do that. Because it's absurd to imagine that as a Forex, maybe it's not, maybe some people can do it. I'm not sure. But for me, it's absurd to think that you can predict the high and the low of any market. Instead, what we can do is we can predict how to get out or scale out, or even break even the partial at points of interest or at important institutional points in the market. And that's how we trade. And we can do that, and we can have confidence doing it because we understand why we're doing it too. So thank you so much for watching. I hope this video kind of helped and pushed you in a certain direction. I hope it made a lot of sense. Again, I hope that everything that's on here is not confusing you too much. And I hope when you look at something like this, even if I make it like that, you don't see this as a loss. You see this as a major win, because what's happening is we're actually predicting the institutional order flow properly. We're getting involved correctly, and we're either breaking even or partialing as per your own management style and risk management style. So thank you so much for watching. This is mentfx. I'll see you guys next week.